Hello everyone, I'm Dr. Swati. So today we are continuing our session of that is we have targeted 1000 most expected MCQs from the commerce, and here we are discussing the 25 most expected MCQs and the PYQs from the basic to advanced level, and here we are covering in the very super fast revision of the entire syllabus, and this is the part 5th of our target 1000 MCQ. So I have a request for you, that is you have to try with yourself firstly questions, and after that you have to see the answers I will provide you. I will going to provide you. Okay. So then after that you have to comment in the comment box how much you score. Okay. In this question. So let's start without delay. So I will just quickly tell you about there are new batches. The batch will be started from here, from the 10th of the May. Okay, and here we will going to provide you the complete course on management, commerce and management. Here we will going to provide you the recorded daily lectures, syllabus we covering the complete syllabus notes is going to be provided in the PDF format. Okay, and the full syllabus mock test is available, and the more than 4000 MCQ series is available with a detailed explanation, and after that the PYQs is also available. And you know that this is golden opportunity for you, that is if you register yourself for the paper 2. Okay, so you will get a paper 1 is free of cost, and the global online provide you the 20% discount on this fees. And so in this fees, if you register yourself for the paper 2, you will get paper 1 is free of cost. For more detail, for more discount, you can go get in touch with this contact number which is given in your screen. Now, how to download the global online? So global online is global online is go to Google Play Store, and after that you have to just search the global online app and just install it and register with your number. And after that you go to my course and select the course whatever you want. And once you are get registered, then the you will get all the materials and the recorded video lectures in the very well in the unit wise folder, so it will be easier to prepare for you, prepare for your examination. Okay. So let's start without delay. The supply curve of the firm is derived from margin cost curve, fixed cost curve, average cost curve, and total cost curve. What is about the supply curve of the firm is derived from? So first of all, what is the supply curve? The supply curve is derived by the comparing the price, okay, price and the quantity. Okay, it's a relationship with the seller. Here, the seller could set the price of goods or the services equals to the zero. Okay, he set the price of the goods and the services which is equals to the zero, and incrementally they increase the price. Okay, after that he was gradually increase the price. At each price, he could calculate the hypothetical quantity. Okay, first of all, he decided to increase his price, and on the basis of price, he hypothetically calculate his quantity. Okay, and it would be the willing to supply and how much he is willing to supply. So this is the supply curve. Okay, so the supply curve is to depend on the marginal, the option number 1, that is the margin cost curve. Okay, so the play a vital role in the margin cost curve in the supply curve. Clear? The next question, that is, what will be the price elasticity of demand by the appropriate method of a Q1 is 20,000, Q2 is 25,000, and the P1 is 10 and P2 is 8. Okay, so how do we calculate it? So, you know, the formula of the price elasticity of demand by the proportionate method. So, what is the formula of the, that is the price elasticity of a demand is equals to proportionate change in quantity divided by proportionate change in price. Okay, it's multiplied by price multiplied by quantity. Okay, so how do we calculate it? The proportionate change in quantity, here you can see there is a 20,000, and after that it is a 25,000. So what is the difference? 5,000, ma'am. Okay, clear? After that, the changes in price, you can see the changes in price, that is 2 rupees. Okay, so here is the 2 rupees, and it multiplied with the price is base year price, that is 10, and the quantity is that is quantity number 1. This is price 1 and quantity 1. So it is a 20,000. So when we calculate it, we will get the answer, that is this one, 1 2 3 1 2 3 1 1. So here is 5 by 2, and this 5 by 2 is yes, 5 by 2 is 1.25. Okay, so 1.25 is the answer. That is the option number B is the right answer over here. Clear? Yes. Next question, what is the probability that non-leap year should have 53 Wednesday and have a 53 uh Wednesday? It is a Wednesday. Okay, it's a Wednesday. Okay, it's a Wednesday. Okay, so how do we calculate it? So the odd days may be the either Sunday. Okay, there is an odd day. You know that there is a probability of non-leap year. Okay, non-leap year. There is a no leap year. Should be having the 53 Wednesday. Okay, so the 53 is a 53 is Wednesday. So what is that? What do we do? So here either here the odd day may be either Sunday, Monday, Tuesday, Wednesday, Thursday, Friday, or Saturday. Therefore, the total number of possible outcome or the element of the supply is how it is. It is 7. Clear? How it will be 7? Because the days having the 7 days in a week. Okay. Or oh, okay. Or we can write it like a 1 by 7. Okay, it is a probability for the 53 Wednesday. Clear? So the Wednesday is non-leap year over here. So what is the probability of that? Probability of that is 1 by 7. So the option is 1 by 7. How is it is simple? So there is the only things we have to do, that is the what is the he is asking about the probability having the 53 Wednesday. Clear? Again, I'm repeating the answer. What is talking? He's talking about there is a non-leap year. Non-leap year, that means they're having a 30 day, 30 days, 30 days. Okay. In okay. So what is there should be a 53 Wednesday. So how many there is a possibility of how many possibilities they have in the week? They're having a 7 days in a week. So how much possibility there is a out of 7 there is a 1 Wednesday. That's why the ratio is 1 by 7. So the option number B is correct over here. Clear? Now the next question, if the coefficient of correlation is positive 0.8, then the coefficient of alienation will be, the coefficient of alienation will be what? So here the coefficient of alienation will be what? So how do we calculate it? The coefficient alienation will be calculated like there is a formula. Okay. So how do we calculate it? 1 minus r square. Okay. So here is 1 and the r is what? This is okay. So 0.8. Okay. Square. So 1 minus 0.64. Okay, and after deducting this 1.64 from the 1, we will get 0.36. Clear? 0.36. So the answer is option number C. The plus no, there is a minus 0.36 point no plus. Okay, because just remember one thing. Whatever the when we calculate it, we will get the answer in plus. Okay, so the if it here is a coefficient is plus, so answer will be plus. Okay, okay. No, option number C. If bxy is 0.6, byx 0.7, then the r. So what is the formula of the r? Is equals to under root of bxy multiplied by byx. So how do we calculate it? Just under root of this, okay, multiplied by 0.7. So so when we calculate it, the answer will be 0.65. Okay, so answer will be 0.65. So the option number minus or plus? Yes, plus. because the correlation coefficient carries the sign of plus, so that's why the answer will be, the coefficient answer will be plus. Okay. Now the next question: which of the following software is used in research analysis? In the research analysis, which software is used by the research analysis? You know that the option number one SAP, option number B ERP, option number C SPSS, or the Tally. So here is the option. The right answer is SPSS. So what is the full form of that? Its the full form is statistics is software statistics software statistic package of software. So I'm not just remember that's the formula. Okay, sure. So the SPSS is a statistics is a software package used for interactive. Okay, for the batches and statistical analysis and long process by the SPSS. Okay, so it was acquired by, who is acquired? It is acquired by the IBM. Okay, in the year of the 2009, and the current version has been comes, that is a IBM SPSS. Okay, IBM SPSS. So right answer is option number C. Next question: goodness of fate of distribution is treated as, you know, option number A, that is a T test, B chi-square test, C Z test, and D F test. So what will be the right answer? You know that goodness of a fit, okay, it's related to chi-square test. Okay, chi-square test is the goodness of a fit in the statistical and the hypothesis testing used to determine the whether a variable is likely to come from the specific distribution. Clear or not? Next question: that is, which of the following is a single use plan? Policy, program, strategy, or the method? So here is a, what is a single use plan? You know, policy is single use plan? No ma'am, because it is used by the two. Okay, one make a policy and who utilize it policy. Okay, the program and the strategy is also having the same things. Then the method methods, and after that there is a, so what is here? Single use plan. Okay, so what is a single use plan? Is a single use plan is a plan are made for handling the non recurring problems. Okay, so that's why the non-recurring problems, the like a single use plan are also refers to as the also refers to as a specific plan. Okay, specific plan. And this plan formulate to handle what non repetitive and or the you can say the unique problems. Okay, so the unique problems, which of the following is the single use plan? So you know that is the policy and the strategy and the methods. They having the multiple uses. Okay, but the program is made for the specific purpose. Okay, so here is a program is a right answer. Okay, now next question: in the field of management, the principle of a balance is related to controlling, directing, organizing, and the communication. So what will be the right answer? The field of management, the principle of balance is related to controlling. The management want to control, directing, or organizing, or communicating. So you know that in the principle of the management, the principle, you have to balance their organizing. They have to organize the things. Okay, organizing or establishing, and it is an effective authority relationship among the related selected work. Okay, and the persons and the workplace in orders for the group to work together efficiently. Yeah. Now the next question: Establishing the standard is a part of decision making processes, controlling processes, organizing processes, and recording processes. So establishing standard is a part of what? So where we use establishing standard. So establishing standard is a part of controlling. It's a controlling process. So what is controlling process? Is a method that can be used to make sure that the standard are being made within the organization. Okay, within the organization, and it's involved a careful collection of information about the system. Okay, about the system, about the processes, about the people, okay, about the group of the people, in order to make a necessary decision about the each. Okay, so the right answer is option number B. Now the next question, the principle of exception is related to controlling, directing, organizing, and the communicating. So what the principle of exception is related to their part of controlling. Okay, why they're part of controlling? Because the function of management which help to seek the plan result to subordinate manager, and is also all level of organization. Okay, so there is exception. Therefore, directing is the principle, organizing, okay, and the communicating. So here the principle of management, what is the principle by the exception state? So principle of the exception, these terms state that the manager should concentrate only on significant deviation rather than the each and every organization activity. Okay, so they have to be make a specific, or the more the manager concentrating control efforts on the significant exception, the more efficient will be result of their control. Okay, so here is the management by exception state that about the how much the management should be the significant deviation rather than the each and every organization activity he has to control. He has to be exception their control. They have to just release their hand to don't take a too much control. Okay, so it will affect on the efficiency. Okay, and which result in the will show. Then which of the following is not an element of the plan? It's not an element of the planning. Principle, objective, policy, strategy. So you know that that is in the principle of the planning. The element which is not comes under, you know that in the planning there is an objective, there is a policy, there is a strategy, but there is no principle. Okay, so there is no principle. The entire process of the planning consists of many aspects. This basically involve the mission, okay, mission, and the objectives, policies, procedures, program, budget, strategy, and all of the above. Okay, so these are the elements, but not a principle. Clear? Now, father of management by objective is who is a who is the father of father management by objective, father of, okay, who is the father of management by objective? That is MOB. Who is the father of MOB? That is management of objective. So what is the right answer? That is Peter Drucker. Okay, Peter Drucker is the father of the management by objective. So what is the what is the sorry management by objective? I wrote it wrong. Okay, so the management by objective, MBO. So MBO is a management practices which aim to increase the organization performance for aligning the goal. Okay, and subordinate the objectives throughout the organization. Okay, so this is management by objective. Either in the other word I can say that is a MOB. It's involved uh, focusing more on result. It's focusing more on result rather than the activity involved. Okay, they're not interested in a MOB management by objective. They are not interested in the activity. They just want a result. So he is what who is the father of the management by objective is a Peter Drucker. Okay, which of the following is a refinance institution? NABARD, LIC, GIC, UTI. So you know that refinancing institution is only is that is a NABARD. Okay. So National Bank of Agriculture and Rural Development. It is an apex developer finance institution under the jurisdiction of the Ministry of Finance. Okay, of Government of India. And actually the NABARD providing and regulating the credit and the other facilities for the promotion and the development of the agriculture, small scale industry, cottage and village industry, handcrafts and the other rural crafts. Okay, the other rural crafts, the word is ruler. Okay, other rural crafts and the aligned economic activity in the rural area. Yeah. The next one, the Reserve Bank of India is statutory body, chartered company, or the public company, or the cooperative. So you know that RBI is a statutory body. Okay, and it was comes in existence in force the 1st of April in 1935. Okay, and the Act of RBI is 1934. Okay, clear. Now, which one of the following is not an instrument of the monetary policy? Bank rate, repo rate, open market operation, and deficit financing. So you know that the monetary policy include the bank rate. Yes, include bank rate, include repo rate. Okay, include the open OMO, open market operation, but it's not include the deficit financing. Okay, so the option number D is correct. That is D is the correct answer. Okay. So, let's understand the what is the deficit financing. Actually, deficit financing is a budgetary situation where the expenditure is higher than the revenue. So that is a deficiency where your expenditure is greater than your revenue. That is a deficiency. And in this, the expenditure revenue gap is financed by their pricing. Okay, pricing of the currency and through the borrowing. Clear? Now the seventh, reverse repo is a tool used by the RBI. Okay, reverse repo is a tool used by the RBI to option number one, regulate a liquidity ratio, regulate absorb liquidity, regulate increase in liquidity with the banking sector. D, keep the liquidity to one level. Okay, so what would the right answer? The reverse repo is a tools used by the REA to absorb the liquidity. Okay, so reverse repo rate is the rate at which the RBI borrow money. Okay, RBI borrow money from the bank for the short term. Okay, so there's a reverse repo. Repo rate means repo rate when the bank borrow from the RBI. Okay, when the bank borrow from the RBI, so it is a it is a repo rate. Okay, is it a repo rate? And what is the reverse repo rate? When the RBI borrow from the banks. So it is a reverse repo rate. So what he is doing, actually what he want to do, he want to absorb the liquidity. Okay, or control the inflation, you can say. And this is important because monetary policy tools employ the RBI to maintain the liquidity and check the inflation in the economy. Clear? Now the first regional rural bank was established in India. When the first regional rural bank was established in India, you know that is the 2nd of the October 1975. Okay, and the 2nd of the October is 1975. That is RRBS. Okay, Regional Rural Banks of India. Okay, RRBS. That 1975. Clear. Which was the bank started mercant banking services in India? Which was the bank started merchant banking services in India? First option, Punjab National Bank. Second, State Bank of India. United Bank of India, Bank of Baroda. So, what will the right answer? That is option number B, State Bank of India. Okay, the State Bank of India is the India's largest domestic investment bank, and began in operation in August 1986, and is wholly owned. Okay, it's wholly owned. Yes. Now, the next question, that is GST is. You know that the GST is what? GST is central tax, federal tax, state tax, or local tax. You know that GST is a federal tax. Okay, is applied to the cost of a certain goods. Federal means when the tax is applied on the cost of certain goods and the services. Okay, then the next one, the period of 12th 5-year plan. 12th 5-year plan is 2000. Yes, I have take this question in the first video. You have to, if you haven't watched this video, you go to the playlist of my Dr. Swati, and you can see this. I have explained the all of 5-year plans over there. Okay, so the duration of the 12th 5-year plan is option number B, 2012 to 2017. And this is the last 5-year plan of from the Planning Commission of India. Okay, deficit budgeting is an instrument of fiscal policy, monetary policy, industrial policy, and agriculture policy. So option where deficit budgeting, deficit budget. This word is for the fiscal policy, and fiscal policy. You know that fiscal policy is the policy of the government. Okay, and which involve the government controlling in the level of spending and the tax rate. Okay, and usually the segment into the tax brackets, the brackets that progress to within the economics, and government use these two tools influence the economics. Okay, so which two tools? That is this two tools, that is the fiscal one, and the next fiscal policy and budgetary policy. Okay, so these tools is used by the government. Okay, next, distinguished unemployment is a feature of option number 1, agriculture. Option number 2, cottage industry. Option number C, medium scale industry. Option number D, large scale industry. So the distinct unemployment is a feature of distinct unemployment is a feature of agriculture. It's the agriculture. Distinct unemployment is exist when the part of the labor force is either left without work or working in the manner such that the productivity is zero. Okay, so this is a distinct disgust unemployment. Okay, so it is related to your, just a second, it's not related to your agriculture. No. Is it related? Yes, it is related to your agriculture. It's right. Okay, it's not it do not affect the aggregate output, so it is affected by the discussed unemployment is a agriculture. Okay, clear. Now the next question, which of the following sector is contributing maximum in GDP in the India? Okay, so following sectors is contributed in the GDP. Okay, so here agriculture sector, B service sector, manufacturing sector, and the mining sector. So what would be the right answer? Yes, who is contributed maximum? You know that service sector. Service sector in India is the maximum, is the largest sector of India, and is contributed near about 92.26 lakhs. Okay, crores in Indian, and this is data of 2018-19. Okay, and yes. Now the next question, that is last question, that is income received in India or deemed to be received in India is taxable in the hands of, in the hand of all the SEC, resident, non-ordinary resident, and the not resident SEC. So you know that income received in India or deemed to received in India is taxable in all the SEC. Okay. So thank you so much. We have completed here the 25 questions. We will meet you soon in the next video.